Hey tech enthusiasts, welcome back to the channel. Today, we're diving into a surprising twist in the AI narrative. Remember all the hype about AI data centers supercharging the utilities sector? Well, the market's hitting the brakes. Utility stocks are taking a tumble, and we're here to unpack what's really going on. Are the AI power demands not as insatiable as we thought? Is this just a temporary correction? Or is something more fundamental shifting in the energy landscape? We'll uncover the truth behind the headlines. This is big, folks. This could impact your investments, the future of energy, and even the pace of AI development. Don't go anywhere. First, let's look at the headlines. Shares of power producers are down, and a key player, Vistra, is feeling the heat. Despite posting solid fourth-quarter earnings, Vistra's stock price has taken a hit. Last year, they were riding high on the anticipation of massive electricity demand from AI data centers. But now, investors are getting cold feet. What happened? Well, the market is a fickle beast. Expectations were sky-high, and now reality seems to be setting in. But is this a justified correction or an overreaction? We need to dig deeper than the surface-level news. We're talking about a major shift in investor sentiment. This isn't just about one company. It's about the entire sector. We need to understand the root causes to see where this is heading. This could be a golden opportunity to buy low or a warning sign to get out. Stay tuned. Now, it's not all doom and gloom. American Electric Power, or AEP, is stepping up its game with a significant $1.7 billion investment in transmission system upgrades. This is a huge move, aimed at bolstering reliability and delivering more power across several states. This investment is critical for supporting growing demand, regardless of the immediate AI hype. AEP is playing the long game, betting on overall electricity needs to continue rising. This is a smart move, showing confidence in the future of energy. While others are panicking, AEP is doubling down. But will it be enough to offset the negative sentiment surrounding the AI slowdown? That's the million-dollar question. We're going to analyze the impact of this investment and see if it can turn the tide. So what's behind this cooling of AI power demand expectations? Several factors are at play. First, the efficiency of AI models is improving. Companies are finding ways to train and run these models with less energy. This is a game changer. Think about it. If the AI algorithms require less power, the demand on utilities isn't as dramatic. We also need to consider the geographical distribution of data centers. Not all data centers are created equal. Some are located in areas with abundant renewable energy resources, reducing the strain on traditional power grids. The rise of edge computing also plays a role. By processing data closer to the source, we can reduce the need for massive centralized data centers. These factors combined paint a more nuanced picture of AI power demand. It's not simply a straight line upwards. It's a complex equation with multiple variables. This is where things get interesting. We need to understand these trends to make informed decisions. Are we witnessing a fundamental shift in AI energy consumption? Or is this just a temporary blip? We also need to address the elephant in the room, the DeepSeek breakthrough. This Chinese firm has apparently made significant progress in AI development without relying on the energy-intensive supercomputers that we initially anticipated. This is a potential disruptor. If DeepSeek's approach proves scalable, it could significantly reduce the overall power demand of AI. This is a major challenge to the established narrative. It forces us to question our assumptions about the future of AI and energy. Could this be a turning point? Is DeepSeek a glimpse into a more efficient AI future? We're going to analyze the implications of this breakthrough and see if it truly threatens the utilities sector. The stakes are incredibly high. Now, let's talk about Constellation Energy. They were a darling of the market, betting big on nuclear power to fuel the AI revolution. They even planned to restart the 3 Mile Island nuclear plant to meet the anticipated demand. But with the changing landscape, their stock has taken a hit. This is a classic example of market speculation gone awry. Constellation made a bold bet, and now it's facing the consequences. This is a stark reminder that even the most promising trends can shift quickly. We need to learn from these mistakes and avoid getting caught up in hype. Can Constellation adapt to the new reality? Or will they be left behind? We're going to examine their strategy and see if they can salvage their position. And what about GE Vernova, the power equipment maker? They're also feeling the pinch. The market is reassessing the demand for turbines and other utility equipment, leading to a decline in their stock price. This is a ripple effect throughout the entire energy ecosystem. The downturn in utilities is impacting the companies that supply them with equipment. This highlights the interconnectedness of the energy sector. We need to understand these linkages to see the full picture. Can GE Vernova diversify its portfolio and weather the storm? Or will they suffer the same fate as other companies tied to the AI power boom. We're going to analyze their prospects and see if they can bounce back. So, why is the market reacting so strongly? It's a combination of factors. Overinflated expectations, improved AI efficiency, and the potential impact of breakthroughs like DeepSeek are all contributing to the shift in sentiment. But there's also a broader trend at play. Investors are becoming more risk-averse. With rising interest rates and economic uncertainty, they're pulling back from speculative investments. This is a natural market cycle. After a period of exuberance, reality sets in. We need to be prepared for these shifts and adjust our strategies accordingly. This is a wake-up call for investors. It's time to reevaluate our portfolios and make sure we're not overexposed to risky assets. Are you ready to face the music? We're going to provide you with actionable insights to navigate this changing landscape. Interestingly, some analysts argue that utilities are actually becoming more attractive as defensive stocks. In times of economic uncertainty, investors often flock to sectors that provide stable income and essential services. Utilities fit that bill. This could provide a floor for utilities stocks, even if the AI power demand doesn't materialize as expected. This is a classic flight to safety. Investors are seeking refuge in reliable sectors. We need to consider this perspective when evaluating the future of utilities. Could this defensive appeal offset the negative sentiment surrounding AI? We're going to weigh the pros and cons and see if utilities can regain their footing. Let's circle back to AEP's $1.7 billion investment. This is a strategic move that goes beyond the short-term AI hype. They're upgrading their transmission infrastructure to meet the overall growing demand for electricity, regardless of the source. This is a long-term vision. AEP is betting on the continued electrification of the economy. They're preparing for a future where electricity is even more essential than it is today. This is a smart and sustainable approach. We need to recognize the value of long-term investments that focus on fundamental needs. Can AEP's strategy pay off in the long run? We're going to analyze their plans and see if they can deliver on their promises. And what about Constellation's acquisition of Calpine? This is a massive deal that creates the largest independent power producer in the U.S. By combining nuclear, natural gas, and renewable energy sources, Constellation is diversifying its portfolio and reducing its reliance on any single technology. This is a strategic hedge against uncertainty. Constellation is preparing for a future where energy sources are more diverse and resilient. We need to recognize the value of diversification in a rapidly changing world. Can this deal help Constellation weather the storm? Or will it be a costly mistake? We're going to analyze the implications of this acquisition and see if it can transform the energy landscape. So what does all this mean for investors? It's time to be cautious, but not panicked. The utilities sector is facing a period of uncertainty, but it's not necessarily a death sentence. We need to do our homework, analyze the individual companies, and understand the underlying trends. Diversification is key. Don't put all your eggs in one basket. Consider investing in a mix of utilities, renewable energy companies, and technology firms. Long-term thinking is essential. Don't get caught up in short-term market fluctuations. Focus on companies with solid fundamentals and sustainable business models. This is a time for careful analysis and strategic decision-making. Are you ready to take control of your investments? We're going to provide you with the tools and knowledge you need to succeed. The future of energy is uncertain, but one thing is clear. It will be driven by innovation, efficiency, and sustainability. We need to embrace new technologies, reduce our carbon footprint, and ensure that everyone has access to affordable and reliable energy. This is a challenge, but it's also an opportunity. We can create a cleaner, more prosperous future for ourselves and generations to come. This requires collaboration, investment, and a willingness to adapt to change. Are you ready to be part of the solution? We're going to continue to explore these issues and provide you with the insights you need to make informed decisions. All right, folks, that's it for today's deep dive into the utility sector. What are your thoughts on the AI power demand slowdown? Do you think this is a temporary correction or a sign of things to come? Let us know in the comments below. And don't forget to like and subscribe for more in-depth analysis of the tech and energy landscape. Thanks for watching, and we'll see you next time.